Okay. Hey, Sanid, we are live right now, and great to see you here. How are you?
I'm doing good, Himanshu, and
And you know what? Wish you a very, very, very happy new financial year. Like सारे लोग विश करते हैं कि हिंदी के कैलेंडर से न्यू ईयर हो गया, इंग्लिश के कैलेंडर से हो गया, फाइनेंशियल न्यू ईयर कोई विश ही नहीं करता यार.
I swear, to be honest, in my 22 years of age, I never thought I will be experiencing so much happiness on the 1st of April.
So like it's not I just got a joke from somewhere like
Yeah,
for boys it's April Fool Day and for men it's a financial year, happy new financial year.
right.
So
Exactly.
anyways, I mean, boss, it's been like what, like 3 years since I've started this company, 3 4 years, like it's the fourth financial year right now. और
Correct.
हर बार एक लफड़ा जरूर होता है. मेरे अकाउंटेंट के साथ मेरा हर साल का लड़ाई होता है, हर साल का झिकझिक है इस टाइम पे. लाइक कि यार कौन सा वाला बिल भेजूं, क्या भेजूं, सारे तो बुक्स दे दिए. एक तो वो बुक्स बुक्स बोलते हैं, मैं बोलता हूँ कौन सा बुक्स चाहिए भाई. मेरे पास कोई बुक वुक नहीं है, आई लेफ्ट ऑल द बुक्स, राइट. एंड बिल्स का पूरा एकदम रेगुलेशन में रखना, लाइक इट्स अ बिग हेडेक, राइट.
Absolutely. Absolutely. You mentioned that you have been experiencing this in the past 4 years.
या.
Well, to be honest, I would say the same. When it comes to our accountant, it's just been it's been like 2 3 years of my journey becoming as an entrepreneur. But since the time I experienced an accountant, jab se company formation when things got serious, it has just been 2 years. So
या.
technically, this is my second financial year, and this happened the same. I mean, on one, I never felt so much stress. And to be honest, yesterday felt like the longest day for me ever because financial year closing के last के 2 3 दिन में तो मतलब मैं क्या बताऊँ मेरे साथ क्या क्या चीजें नहीं हुई हैं. Because the same thing, my accountant was on my head, give me these bills.
Yeah, I mean, so the thing that I observed here, for last 3 years is that कि थोड़ा सा ना उनके साइड से assumption होता है, like we know what the basic of at least the basics of Indian taxation system and finance. But the
Eggs.
thing is that कि हमें term भी नहीं पता होता, like when they are referring to books, they are like referring to whatever bills you have to put it in a file and they call it your financial book कि क्या क्या expenses हुए थे, क्या क्या earning हुई थी. एंड पता है क्या मतलब लाइक इट्स देयर इज अ सेइंग लाइक योर कैरेक्टर इज व्हाट यू आर, राइट. So
True.
the same thing that I imagine for businesses is that your business is what your financial book is, right.
Right.
मतलब सारे प्रोजेक्शन, सारे वैल्यूएशन, लाइक तुम बोल दो कि तुम्हारी कंपनी 10 करोड़ की है, बट एट द एंड पीपल आर गोइंग टू कम टू योर दिस बुक ओनली टू वेरीफाई दैट एक्चुअली में है कि नहीं है, राइट.
I know,
सो
right?
या.
Exactly.
So थोड़ा बेसिक चीज पता होना चाहिए. आई मीन द बेस्ट थिंग दैट आई कैन रिलेट दिस टू राइट नाउ इज दैट द सीन इन द मूवी द फाउंडर, वो मैकडोनल्ड,
Yeah, the McDonald's.
मैकडी वाला, हाँ मैकडी वाला. उसमें लाइक ही इज रनिंग अ गुड चेन ऑफ मैकडी, बट ही स्टिल हैज टू गो टू बैंक फॉर एंड ही इज नॉट एबल टू पे मॉर्गेज एंड ऑल. लाइक फाइनेंशियल टेंशन है उसके सिर पे कि यार लोन कैसे चुकाऊं, ये मेरे को घर से बाहर निकाल रहा है और मैं ऐसा बिजनेस रन कर रहा हूँ जो गली गली पे अभी जा करके खुलने वाला है. लाइक
Himanshu,
इट्स
I'm just gonna pause you for a very small moment.
श्योर श्योर.
Has anybody else joined us as of now?
Yeah, I guess I'm seeing few people who are joining us, like 9 10 people.
That's great. That's great. So for all the people out there who can see us and who can hear us right now, if you have any questions, if you want to add to whatever we are speaking and discussing right now, just put all the things in comments and we'll see it and we'll take things, we'll talk about your discussions immediately. Okay. So go ahead,
Yeah,
Himanshu. We were there on the McDonald's movie.
yeah. I mean, as I was speaking, like उधर होता क्या है कि like the guy is focusing on his business, right? He need to expand his business and all. But the issue is this कि he is also troubled by bank. Like financially, तुम अगर healthy नहीं हो, you cannot focus on your business, right? And that is when a financial consultant comes to him and says, तुम्हारा तो पूरा B model ही गलत है. Like you need to get into real estate, and that is
Exactly.
what changed McDonald, right?
Yeah.
So imagine that guy not hearing this talk in the bank and not suggesting the founder to change the way MACD is operating. The things
Correct.
would have been different. I mean, you would never see a Mac Maharaja in some MACD in India, right?
That's true. That's true.
Anyways, so I'm gonna now switch over to our expert over here. Unfortunately, Samar sir could not join us because of some reasons, but still we have Gaurav Talwar here with us. So just to give you a brief intro of Gaurav sir here, he's running his own firm, which is known by the name of Felix Advisory, and he's mentoring a lots of startups also at the same time. And he's into he's supporting lots of startup, advising them, mentoring them, and he's a CA along with all this, right? So I think he's a perfect person if you want, if as a co-founder you want to relate to what accountants wants to say. Like, take this session as a training session for bridging the gap between your communication and what your accountant is saying. Because even if you are not the finance wala guy, you are not the accountant in your company, you still need to know some basic stuff of it. वरना फिर से कोई द फाउंडर आएगा और तुम्हारा बिजनेस उठा के ले जाएगा, ये भी हो सकता है. द फ्लिप साइड ऑफ इट.
Exactly. So
Yeah,
many stories out there in the market.
correct. So now switching over to Gaurav sir here. uh, okay. Hello.
Hello, sir. It was exactly, and we welcome you and thank you for giving us your time on a Sunday morning.
No, it's my pleasure. It's my pleasure, and that too on a Sunday morning on the closure of the financial year. So that's fine. No issues with that. I'm
Right.
happy to discuss these things out here, and really interesting to hear you both discussing the issues and how the things have been phasing out for all the startups and even for people who are running businesses, and with the basic meaning of even what a books of accounts means. See, if I look at the perspective from my point of view, every business has two aspects which runs them.
Right.
One is, anyways, the business idea, which primarily is the key soul of any business, which once you identify, you start working on it. But the second aspect is a business can take off or cannot take off, can run smoothly, cannot run smoothly. Depends a lot on how you are managing your financials. It is not only about managing your idea, it is also about managing your expenses well, managing your cash flows well. Now, all these points like a cash flow, managing an MIS, which is Management Information Systems, come very easy for a chartered accountant to come and say, okay, we should make this. But what we have realized that it's a matter of fact that we as accountants and chartered accountants should also understand that the people on the other side may not and are not clearly aware of all these points or matters to be taken care of, like a very simple input like an MIS. An
Okay.
MIS on a monthly basis is a very relevant thing, which for any accounting or financial advisor is like, okay, it means a collation of your inputs, expenses, and your output invoices, and giving you the report of how your business performed. But what we have seen of late that these terms and all these things, though it comes handy for financial background people and for people who have been in business for long, but for startups and all, we have found that these aspects of what a MIS means, what a financial control means, what a compliance means, is very different. Because it's been my experience also that once we meet any startup which has
Yeah.
been operating for almost a year and a half,
Okay.
and once I start discussing with him that, okay, do you know that this is a tax compliance which you had to do while making a payment? Do you know that this was an annual compliance which you had to do if you're running a company or a limited liability partnership? Now,
Right.
the first answer which comes that no, Gaurav, we actually ended up only concentrating on the business idea. We have set this up, it is good, and now we are raising funds, but sorry, we didn't do anything. And it's that point of time that we start working on from the back date to identify all the non compliances and all those things which have been done, identifying few expenses which have been incurred which were never planned, identifying few invoices which could have been raised which were never raised, and at the end of the day then we identify that all these non compliances,
Yeah.
all
Yeah.
these non-noting of actual expenses and income actually results in a very different financial picture of the business, unlike what the promoter or what the entrepreneur, what the startup team were actually considering it to be. Like, we figure out that okay, you had not done X compliances which resulted in so much of interest penalty for you in 1 year, that your whole financial picture is distorted. You figure
Correct. I
out that
mean,
you
the projections are then off chart, and a lot of things cannot even be repaired. Like I heard that you cannot file the expense in next year, right? So,
right. See what of thing happened. Like say March for 2018 has just closed. Now this was for financial year 2017-18. Now you have closed your books. You have booked all your invoices. You could have booked the expenses which you are aware are being incurred. But then what happens that say you didn't account for some expenses which have been incurred. Like it is very basic. Like if you're getting a software made and suddenly you have not accounted for that expense because you are not paying him anything, you are not even getting your software this year, but suddenly an invoice from that software development company comes to you in the month of July for the services rendered for 17-18. Suddenly you realize that you have made your projections for 17-18, you have closed your cash flow, but there was some expense of large amount which has not been booked, and knowingly unknowingly you wanted to close everything on time and you ended up filing your returns everything by May or June, and then suddenly an invoice comes for financial year 17-18. Now the problem is you cannot book it now in 17-18 because you've already closed your books, you have made your filings basis the things, and now if you go out to book that in 18-19, then that expense is not allowable because it becomes a prior period expense, which means that expense which is incurred for 17-18 cannot be claimed in the financial year 18-19, because in Indian accounting and tax system, everything goes year by year. So expense of 1 year has to be claimed only in that particular year. Then if you really want to claim it, then the point will be you have to revise our income tax returns. We'll have to claim some additional, we have to do some additional filings, and only then we can go out claiming that expense. If you look at the outcome of this, what happens that your 17-18 picture could be showing different, but after booking this expense, along with adequate interest penalty on the amount of tax compliance which you didn't do, it can distort your projection, it can distort your cash flow, it can also distort the overall view of the business which you are projecting to an investor if you're talking to them. So what we have understood actually in last couple of years, and even given the whole government incentive, that there are two things which every business is now expected to do, whether you are big, small, or if you are just even a startup set up, say yesterday, government is coming very heavily on how you are managing your books, not because of the purpose that it should be good for your business, but also for the purpose that government ensures that today or tomorrow your business will go big, and how you manage your books is a reflection of how you are managing the money which you have raised up from investors, etc. If you're looking at all the things that are going around currently,
Right.
it is all because of the mismanagement of the books and how the accounting and the accountants as well as the entrepreneurs were discussing and running their businesses. So at the end of the day, whether I'm running a private limited company or whether I'm running a limited liability partnership, government says that at the end of the day there is some part of public money involved. Like if you end up raising a very small limit from a bank, government says that's public money, it's not a promoter's money, it's not an individual money. Government expects that even if you pick up a single line of credit in your books of account, that is public money that you're using. So at the end of the day, government says the moment a public money interest comes, so even if you're running a private limited company, you have some basic requirements of accounting which you need to follow. They are called accounting standards, accounting policies which are defined, which make sure that your books are being made in a manner and they are reflecting your true and fair view of the books of accounts, so that none of the expenses are over budgeted, none of your incomes are understated or overstated, just to reflect something to the banks or to your creditors or to your lenders or to your investors in a manner which is not correct, because all these things will tomorrow come out heavily on companies as well as promoters if there is any overstatement of expenses or understatement of expenses, and similar for income. Second thing which we are seeing, that the government focus on compliances has increased a lot, and compliances in India are not annual; they are monthly. Whether you talk of income tax compliances, whether you talk of GST compliances, which is the goods and services tax, whether you talk of your labor law related compliances, say Provident Fund, DSI, or whether you talk of any compliances related to the registrar of companies, or if you are, or if there can be other allied compliances depending on the businesses that you are into. Now, all these things have a very basic requirement in India, is that you should be undertaking at least your compliances, because the penalty interest which comes for non undertaking of compliances is high. Now, what we are seeing, that if I look at both these things, then for a basic entrepreneur who is just out of college or in college and running these businesses, it will be too harsh for anybody to expect that they are aware of it. But the harsh reality of the time is that government doesn't acknowledge that fact much, except few exemptions for startup. Government expects every business, whether it is a startup or an 100-year-old business, to at least do these two basic sanity requirements for the business. That is, their books of accounts as well as their compliances should be in time. So that is where our main focus has been with all the startups that we work, that you ensure that your idea is taken care of very well by you as an entrepreneur, but you have somebody identified, or you should have some support at the back end which is taking care of your accounting as well as your compliances, to ensure that tomorrow, once you are becoming big, or you are going out to raising money, or there is an inquiry or a notice, you have adequate systems in place in the past only, which took care of all these aspects, so that there is no non-compliance, there is no distortion of books, the reflection in the books is very true and fair. So that's something which we believe is very relevant as of today, for all the entrepreneurs to understand that only a business idea, which is and we have seen businesses in the past which were very good in ideas, but they could never raise money, because once we did the diligence for them, for past diligence means primarily looking into the books. So once an investor comes, he generally asks a CA firm to go and look into the books of startups at least for past 2 years, to figure out the nature of expenses, the booking of expenses, the compliances undertaking, and all those things, whether they were fine or not. And we have seen in the past that once we go and review those books for the investor and give him a report of the accounting and compliance status, many a times we have found that the books have been so much distorted, and the compliances have not yet been undertaking even to the extent of 1%, that the liability and the exposures that an investor can take up if he invests are too high. So we have seen that investors straight away saying, okay, the idea was good, but sorry, we cannot invest in your company because of these ABCD things, and the business suddenly then is out of business, because they needed money and the money couldn't come. So that's where, if you look at the overall plan of things, now this is the financial year is starting, so it will be a good idea for all entrepreneurs like you to take stock of things, to understand and discuss your business with any of the financial consultants whom you have on board, to identify the compliances that are applicable on you, to understand how your basic books of account should be maintained, and have a person identified, whether it is outsourced or in-house, who at least at the basic level takes care of it. And you as an entrepreneur should not be divulging into it 100%, but at least once a month or once a quarter, take review and take stock of things, understand the nature and status of those compliances, and then proceed. That's what we have seen that is very relevant nowadays, to understand that how these things can impact the businesses.
So, just going by your statement, so there was a point where you said that it is this thing is same in the case of income tax also, right?
Right.
So individual income. So even there are lots of startup which have not their company registered, but they are making some money from their startup. The same rule
Mhm.
applies for them also, right?
See, everybody. So what we have seen, that if you're running business in your own name, so if you look at the Indian way of doing business, there are multiple options. Like, I can be running business individually in my own name, which is primarily called a sole proprietorship firm, which means it is not registered as a company, not an entity, nothing. It is my own personal name that I earn business and that I do business. Other options can be, I may set up a private limited company, which means a company is set up where I invest, I acquire shares, and then I do business in the private limited company, which is a separate legal entity. So I am separate. In the first option, I was the one who's running the business. In the second option, it is my private limited company, which is a separate legal entity which runs the business. So liability, asset, etc. is all of that entity. I am only a shareholder. Similarly, in India, there are other options. Unlike a private limited company, you can set up a partnership firm. You can set up a limited liability company. You can limited liability partnership firm. You can set up a public limited company depending on the level of business. Now, all these things are involved, but whichever does business, whether you do business at your own level, or whether you are doing business at a company level or limited liability partnership level, all these regulations which are applicable on a business becomes applicable at your individual level, or at the company level, or at the firm level. So whether it is income tax compliances or any other compliances, whether you do on individual name or any other name, subject to few conditions, all compliances and all disclosures are otherwise applicable even in your individual name, if you are running business on your individual capacity.
Okay, so which means that I've been breaking law for last the couple of years. So I mean, apart from this, like let's say I'm totally focused on my business, right? So
Yeah.
you said that I need to keep account of my books, like there are expenses, but then again, lots of payment are being made via my bank account. So doesn't if I share with you my bank account statement with an accountant, doesn't it mean that it has been booked in my expense and he can take it from there? Or do you
No,
have
no.
to? Yeah.
So you are running business, Himanshu, in your own name or in a partnership firm or a company name? And
So
which
let's say
bank
I'm
are you?
running a private limited company. I have a current account, right? And I have lots of transaction happening over there. I don't have a copy of every bill, and there are also lots of cash transaction. So I don't know how to take care of each of the expenses, how to account for it, and all that. So as an individual, like my company has no dedicated, what do you say, an accountant working here, right? So how do I take care on a day-to-day basis?
See, first, to be frank, a bank statement is not an account, books of account. Bank statement is just a methodology which a chartered accountant or an accountant will apply to get a basic sense of which accounting entries are to be passed. But at the end of the day, if you have some credits in your bank statement, say the credits is primarily where you received money in your bank statement. Now, your bank statement can have credits primarily from three major sources. One can be your own share capital, where you infused money into the company. Second can be any loan which you took from your friends, family, relatives, or banks. And third will be your invoices. Now, if any accountant is looking into your books, is looking into your bank statement, then he individually cannot simply segregate all these three categories on his own. He can look at it. Okay, it can have a name that, okay, Himanshu has given 100 rupees to his firm. Now there is a difference in why did Himanshu give that firm it money to the firm, because as I said earlier, you and your company are separate legal entity. You are not one. So if your bank statement had 100 rupee receipt from Himanshu, then the basic question which an accountant will have is whether this 100 rupees is towards share capital brought in by Himanshu, whether this 100 rupees is towards loan brought in by Himanshu, or whether this 100 rupees is against an invoice which the company raised on Himanshu for some income. Like, company can render services to its shareholders. There is no restriction on it. Now, similarly, if I go to the expense side, company can have many debits. So if you look at the bank statement, the debit means the expenses or the money which has moved out of the bank account. Now, there can be many reasons out of it. Again, taking the same example, there can be 100 rupees which the company has paid to Himanshu. Now, why did company pay that money to Himanshu? Was it return of his share capital? Was it return of his loan? Or was it some expense which Himanshu incurred on behalf of the company, which the company is now repaying to it? If you look at all these five, six, seven scenarios, now there can be many scenarios which can keep on adding to it. Then, if you only give a bank statement to a person, it will never serve the purpose, because max there can be narration money given to Himanshu. Now, why was that money given? Whether it is share capital, then it has its own sets of compliances. Whether it is shareholder director, then it has own set of compliances. If it was income from Himanshu, then there is own set of compliances like raising of invoice, complying with TDS, which is tax deducted at source, complying with GST, whether the bill which I raised with GST, whether it was a without GST bill, why it was without GST bill. So if you look at it, a bank statement in isolation can never help you create the perfect book. Yes, it will give you an idea that, okay, how much money came in, how much money went out. Now, second is also that you are saying that, yes, in India, you cannot do every business, even globally, you cannot do every business only through bank, because at the end of the day, you need some petty cash. You need some expenses which are incurred in cash for ABCD reasons, and also on the day-to-day expense basis. Now, again, there are two sources of this cash which the company can have. One is the source of cash is primarily that, okay, you pulled out some money from the bank statement, so from the bank account, so that will show as a debit in your books of account. So an accountant can know that, okay, 100 rupees were withdrawn from the bank as cash. Now, where did that 100 rupee got spent for? Now, again, you will have to go into and figure out those nature of expenses. In India, there are restrictions on expenses being incurred in cash up beyond a specified limit. In India, there are restrictions on a company receiving cash for services beyond a specified limit, which when the questions are being raised. There is a restriction in India if you go and deposit on more than specified amount of cash into a bank account. So what I'm only suggesting that just having a bank account will not serve the purpose which I started the discussions with, because every debit or credit or accounting entry in your books of account has its own set of compliances related to income tax, related to goods and services tax, related to your registrar of companies, because the share capital will have n number of filings to be done with the ROC. So all these things are simple. What I'm outlining is, it is not that all these things are rocket sciences and you have to really deep dive. No, what I'm only suggesting that these things are simple. If you have your standard operating procedures defined, that how everything has to be taken care of, you should never face a problem, because obviously there can be certain issues which anyways can come up later on. But at least at a basic hygiene level, there should not be a problem if you're having a standard operating procedure which is taking care of all those things. Like if you end up giving your accountant a bank statement at the end of 1 year and ask him to make a book of account for financial year 17-18 at the end of March, then there can be many things which have happened in the month of April, May, June, which you may not even remember now. That, okay, why did $100 come from somebody? Why this $100 was paid to somebody? So that's why I'm saying, if you have a SOP which is defined, which takes care of how your books are being made, how your accounting entries are being tallied, if there's a cash expense, you have adequate vouchers. So the relevance is, every expense or income of a business should have a documentation support, which can be your invoice if you are receiving some income, which should be your expense invoice. Like if you went out and stayed in a hotel as a shareholder director of a company for some business meet, and the company is booking that expense, so there should be an adequate bill from the hotel in the name of the company for the company to claim it. So the idea is, whatever entries you're passing in your business should have adequate documentation support at the back end.
Okay, so I roughly got your point, but one thing is really clear, that lots of people are out there thinking that in the cashless economy, like I'm doing all the transaction happening as via my card or bank account. That does not simply mean that everything has been taken care of. So there
No,
are
see,
some
because at
extra.
the end of the day, if you end up swiping a card toward Mr. X for 100,000 rupees, now why did you give him that money? It can be through bank, but that doesn't solve the purpose of the income tax and the goods and services tax and the general accounting
Correct,
problem.
correct. Okay, okay. Now I can make sense out of it. But then again, so here's another challenge that I'm gonna face as a co-founder, and this is a challenge between communication between my accountant and me. So, what is the easiest thing that you suggest? What is that? Like you said, that you should have a set of procedures, like day-to-day activities. So, what is the easiest thing that a startup company can do to maintain this record without spending lots of effort on it, so that even the accountant, let's say there is a third party accountant there, then even he or she can make sense out of it and does not need a lot of involvement from my side.
See, generally, what we have seen, that if you have 100 to 150 transactions in a month, which is, I'm saying, from income as well as expense, then what we have seen, that you should have at least a monthly closure of books. We don't say a weekly or a bi-weekly. Monthly closure of books for 150 to 200 entries is really fine. What you should do is that you should excuse me, you should have one day or couple of days identified at the end of the month. You should hand over all your bank statements and all your invoices and input expenses which you have incurred to your accountant by end of the month. Allow him a couple of days time, say the month ends on say 30th of June. You should allow him at least 3 to 4 days from 1st to 4th of July to look into your bank statement, prepare your books of account, and then let him come back to you with the list of requirements which he still feels pending, because the first monthly compliance that hits any company or a partnership firm or any person doing business is 7th of the next month. Like for the month of June, the first compliance that will hit you will be the 7th of the next month from the income tax perspective, where you have to deposit the TDS, which is tax deducted at source. So if you are incurring any expense in India, the government of India, the income tax rules prescribe that, okay, if you're making payment to anybody, there's a specified amount which you will withhold from that payment and you will deposit it to income tax authority on behalf of the person on whom you are remitting the payment. Now, the first compliance of that thing comes on 7th. So what we have generally seen, that you should have closed all these things by 5th to 6th max, so that you can at least undertake your first compliance on 7th, because otherwise it attracts interest amount of 1% per month for the whole month. So that's what our idea has been, that you should have at least 2 to 3 days given to your accountant, and half a day of yours for him to discuss your books with him, and he can tell you that okay, these were the expenses for which I have these bills, but these are two three expenses for which I don't know, which you can explain him. He can tell you that okay, these are the amount which has come into the company. I understand that these are the income which is revenue of the firm, and these are share capital which has come, for which I need these two three things, for which you can give him the information. Then he can close the books and proceed with the compliances.
Okay, so
Now, yeah.
doing this on a monthly basis, right?
Yeah, so that's what our
Okay,
view has
okay.
been, that even for smaller startups up to 200 transactions per month, doing it on a monthly basis is a fair bit of deal, and that will not take more than half a day of any entrepreneur to sit with the financial advisory firms and
Mhm,
discuss and get it closed. But
mhm.
yes, if your businesses are going good, you have more than 500, 600, 700 transactions, then closing books at 4 5 days we have seen as challenge. Then you can go for a bi-weekly closure or a weekly closure depending on it, because now even there are softwares which takes care of your accounting closing every week very easily. But it depends. No point of getting too harping on that. If you know that yes, it can be managed in monthly types, that's not a problem. You can very easily do that.
Correct. Got it. Got it. So I mean, okay. So this is the rule that I guess I'm gonna set up. Like first thing first, that like I need to keep a book for every invoice. Like we should not throw it away just here and then, or taking a picture, like assuming कि बैंक अकाउंट में तो आ गया यार, अब क्या पूछ
No,
रहे
see,
थे?
to be very frank, Income Tax Act expects you to keep all your books of account at least for 6 assessment years, which is for 7 years from the year in which you are incurring that expense or earning that revenue, minimum.
Okay, okay. So
So you
every
cannot.
invoice, so technically in a simpler term, every invoice that is being generated against me, I should have that thing for at least 6 or 7 years.
Yes. So that's what the law
Okay,
of the land. So if
okay,
the cases are going under scrutiny, then yes, the period of hold can go much more than that. But at least for 6 assessment years or for 7 years from the end of the financial year, for 18-19, you will have to keep for next 6 years beyond 18-19 financial year. So it's not about just keeping something in a WhatsApp, or so you government doesn't say keep a hard copy of it. You can store it in a cloud, you can store it in Dropbox, you can store it in any of the cloud that you use, but you should have adequate record of your books of accounts at least for at least for 7 financial years, at least from the year which you are incurring the expense plus 6 years.
okay. So this was a point that I had no idea about, like literally no idea about. Okay,
See,
so
because generally what happens that if you close your books of account for 17-18 now, you have time to file your income tax returns till June, July, depending on the nature, or till 30th of September, or in some cases 30th of November also. The scrutiny for all these things, if your case comes to a scrutiny, like basis what you have filed, income tax authority have some questions, then they will send you notice to ask you that okay, I want to review and I want to have a review of the income statements that you have filed. And these things generally don't come back to you in the same year. Like it will not come back to you if you file your return in September or November or July. It will not come to you generally by December or September, January. It will come to you by end of December, and the time can be extended. So generally what we have seen that an assessment or a scrutiny happens and closes 2 to 3 years generally beyond your actual financial year. For 17-18, generally it will close by 2020. Now, anyways, if you don't maintain your books of accounts, etc., and even today your books have been closed, but you didn't maintain your records in soft copy or in hard copy with you, then the matter comes up for scrutiny after 3 years or 4 years. Then, then, then you will go haphazard that okay, where are those datas?
yeah,
So,
I'll also be clueless because I don't remember now that which transaction was for which person.
and how and why was it structured? Why did you receive? Because today in the garb of business, we take decisions just to ensure that the business keeps on running. But yes,
Correct.
at the back end, income tax authorities and GST and related authorities may have other opinions about it. That no, I want to see this. I'm fishing some smell about this. So all those things can be different. So that's where relevance comes of keeping your data. There is no problem of maintaining data online or anywhere. The government is only concerned. You should give me the information if I request for it.
Mhm. So okay, so I got this point, but there is one more challenge that I've been interacting with lots of fellow entrepreneurs. So there is one more thing that I'm seeing very common these days is none of the projection is getting matched. Like I'm projecting something on the basis of what I have idea, like how my business will grow, right? So I'm
Right.
assuming the business will come in and cash will come in from here, and these are the basic expenses that we take care. let's just add 10% to it, like extra expenses, and this is what my projection will be for the next financial year or for the next year. But then
Right.
this projection is not even near to what reality is. So and the majority of the part, like I just corrected myself on the basis of your suggestion only last year. And what I observed is that the major thing that every startup is missing is the cash flow projection. Like they fail to calculate the cash expense that is going there, the hidden small cost that is going there. Like who keeps a bill of purchasing a box of pen for 200 rupees? I mean, they let it go like easily. Okay, ye to chota sa transaction hai, aap do. But somehow these are the small thing that catches up in the books. So how do you think, like how serious this issue is, and how can we tackle this on a day-to-day basis, especially the
See,
cash
as
part of it?
as I outlined, cash expenses at the end of the day are business expenses. It is not your personal expense that tax authority or somebody is not worried about it. If you incurred an expense and that was incurred for the purpose of business, then ideally that should be charged to the business. I'm not getting into the quantum, the nature, amount, etc. So even it is 1 rupee or even it is 100,000 rupees, whatever is the expense, that should be charged out. Now, how does it impact projection? Obviously, if the amount is too small, the impact on projection is not much. But if the amount is high, like you keep on buying 200 rupees pen not once a month but every day, then the amount goes substantial even for a smaller business. The
Correct.
idea is that, okay, how are you factoring in these expenses on a daily basis? If you're recording them, if you have generally, if we are making projections for a business for next 5 years, we generally, after identifying the general expenses, we top up the expenses by at least 10 to 12% to take care of all these miscellaneous expenses which are generally missed or are not recorded or are not even told to us that these are being incurred because the promoters are not aware of it. So it is two different things, Himanshu. One is booking of those expenses. The answer is you have to book. Second is factoring those expenses in the projection, that yes, if the amount is too small, projections will not get impacted. But if the
Mhm.
amounts are high, then the projection should take care of it. And if you really is not aware of it, then by making projections, please factor in at least 5 to 7% or even up to 10% of your total expenses in the projection as miscellaneous expenses, which are being incurred or will be incurred, but may not be captured in the larger heads which you are giving the projections.
Correct. Okay. So you are suggesting a figure between 7 to 12%.
Yes, because that
This
is
bracket.
depending on the business to business,
Business.
it can
Correct.
vary, but ideally that should be the range.
Correct. And so there's a one more hurdle that that is the most recent hurdle that we are hearing is related to the new compliances that government is bringing. Like whether I should even have a GST number for my startup. Some startup think like having a GST number is complimentary. Some say that it is compulsory if you want to have a good business. So what do you suggest upon that? Like should I have a GST number even if I'm just starting like 6 months ago?
See, to be frank, if we start discussing of GST, we may need the entire session. But just to take a brief about it, see, GST as a law has many aspects attached to it. Does every company need to have a GST or every business needs to have a GST? My simple answer is no. There are specified limits up to which you don't need to have your GST number, and even if somebody forces you, you can tell him that, okay, I'm not falling within this limit. Like for general states, the limit is up to 20 lakhs of revenue in the previous financial year. So if my revenue in the previous financial year was not beyond 20 lakhs, and if in the current year I'm not exceeding 20 lakhs, then up to the 20 lakh revenue for the current year, I am not required to even compulsorily register for GST. Can you voluntarily
Mhm.
register? Yes, you can voluntarily register. Nobody stops you. Is there a benefit if you voluntarily register? I will say yes. The only benefit is that whatever things you purchase, and if GST is applied on it, you start getting credits for it, which you can use once you start billing it. So it's a complex structure, but the answer to this is whether you need to register in GST or not. I'm saying that there is a specified exemption. If you fall within that exemption, then the rule of the land allows you to not register unless and until you reach that specified limit. So even like if you see from today, actually one of the very big change that has been announced from today is the e-way bill, which is primarily if you are into the business of supplying goods or manufacturing something, then every product which comes in or goes out of your factory up to and if the invoice value is more than 50,000, Then there's additional invoice. Then there's an additional document which your transporter needs to carry, which is now called an e-way bill, which has to be generated either by you as a buyer or a seller, or by the transporter himself. But that document is required. Now,
Okay,
one of the
so
precondition of that document is GST registration. So if I'm not registered in GST, will e-way bill ask me to register? No. Again, the answer is no. So the basic thing is, if you fall in that exemption, you should not register. Nobody can force you to register unless it's your own business call. But if yes, if you're falling in that limit, then you have to register. There is no option around it.
okay, so just like you said, it will get too complicated if we start to discuss GST and e-way bill here. But one thing is sure for there, that we need to have a discussion on this also. Like,
Right, because that is an
sometimes.
ideal thing. Because every startup, once you cross your 20 lakh revenue in the general states, you need to register with GST. And once the GST you are registered, then every expense that you are booking will have a GST component, which you get the input credit for. Every invoice which you raise will have a GST output, which you can set off. And there's different categories of it. So yes, GST, we may have a separate session to discuss these things in much detail.
Mhm. Sure, sure. I mean, one of the biggest confusion that is floating around the city is that if you even have voluntarily registered for GST number, somehow people play like, I am having GST number because I have revenue of 20 lakhs. But even they don't have a revenue of 20 lakhs, they like to have GST number just to show off that thing. So I don't know if there's a disadvantage of that. But again, let's
See, the
have a discussion.
disadvantage is if you register with GST, then even if you have zero revenue, you have to do your monthly compliances as well as annual compliances.
Okay, so maintenance is a headache there then.
Yes, so even if you don't have any revenue, you will have to go out and file your nil returns.
Okay, okay, okay. Anyways, we'll have a separate discussion on this. But summing it all up, like the major agenda for this program was to just to clarify to every other businesses out there that you need to have a good maintenance of your books. And when your accountant asks for your books, what exactly he or she is asking for it, right? So for summing it up, I'm gonna sum it up in pointers. Like one should have at least a monthly, closure of the books, and spend at least give at least 3 to 4 days to their accountants, and spend at least half day with their accountant to explain their books, right?
Right,
And this of course depends upon the number of transaction that is happening, and this
right,
transaction includes all the expenses that are going out and the revenues that are coming in, right?
right, right.
Right, and also the liability, the tax liability computation and all that cannot simply be dependent on the bank statement. It will always be dependent on the books. So bank statement are just a, let's call it a summary of whatever it is going on, like maybe a hint, but not the
We will say that
complete
yes, bank statements are generally just an indicator factor that okay, what are things that
indicator.
you've
Okay.
done.
Okay, but they never narrate even the part of the it, they never narrate the real story that is going on in a business, right?
See, because that is just your cash flow. That is not your expenses. Like very frankly,
Hmm.
say you have employees in your company, right?
Hmm.
And say for the financial year 17-18, which is just closed on 31st of March, you
Hmm.
have a policy for March salary to be paid in April. Or say you have some telephone expenses for the month of March, which you will pay only once you get the invoice, right? Now,
Correct.
that invoice from the telecom company didn't come to you in the month of March. That will obviously come to you after the invoices have been, after the services are rendered. That will come to
Hmm.
you, say, on 10th, 12th, or 14th of April. Now,
Correct.
if you look at your book of account for the year 17-18, this expense of telephone and telecom is not booked there, right?
Yeah,
But this
exactly.
expense should be recorded for 17-18. So I will say
Hmm.
that what happens that bank statement only gives you the view of things which have been routed through that bank account. Now, if you have
Okay.
something which is not routed through your bank account, never gets captured there, like some provision, like some expense which for which you haven't received the invoice, some
Hmm.
invoice which you have received but you have not paid. Now that
Hmm.
is not reflected in the bank account. That is not even your accountant can ever be aware that okay, this expense invoice is lying in the CEO's drawer. Now your bank
Correct.
statement can only capture what has actually been done. It's a follow up of action.
Hmm.
But your books of accounts are very different from a bank statement. They can be like say there is an invoice. You have rendered services for the month of March, but you have not raised the invoice. You will raise the invoice because you have a commitment to raise invoice after 30 days of rendering the services. Now for the month of March, if you are closing the books and you give a bank statement, your accountant will not even reflect that revenue, because he will say bank statement में तो था ही नहीं, statement में होगा भी नहीं, because for the month of March you will raise the invoice on 30th of April, and you will get the money somewhere in May June of 2018. But your books of accounts for 17-18 should have captured that invoice which you have raised. So what we suggest, that bank statement is only reflection of your limited space of transactions which have happened through the bank account, and there are large number of transactions which can remain missed if you actually don't control them.
Correct. Yeah, so I mean, I got your point exactly. There's the importance of keeping the books. I mean, all the problems that I've been hearing from every other person, like they are missing the calculation in the cash flow projection. There are some hidden costs, so-called hidden costs. These all are there only because you are only depending on your bank account and the transaction that are happening online, and you are not keeping record of the minor cash flow transaction. You're not keeping your book well maintained, and these are the problems that become mountains in your financial projection.
Right.
And again, therein is where lie the huge communication gap between your accountant and you. So as a business, you need to have a basic level of awareness, right? And about 6 months ago, Gaurav, you also started an initiative called Insure Tax,
Right.
which is supporting startups and also educating startups about these things. Like this is why we are having this discussion. So if just 5 minutes, if you can explain what's your vision there, as a CA, what challenges that you saw happening, in the industry, the communication gap between CXO level people and accountants. So how insure tax is there and playing a role of bridging the gap.
See, what we did in InsurTax and what our basic idea was, that we wanted to take into consideration that in every firm, in every company that you're running, uh, accounting is essential. But what we have figured out, that the promoters and the CEOs generally don't have much time to take into the whole accounting and the tax piece into their day-to-day affair of things. They want to keep it more monthly. So the initiative around InsurTax is primarily three, because it is more of your back office sort of scenario where you can completely outsource your accounting and your tax piece. We have a full cloud-based platform which we wanted to ensure that if you are a CEO, you may want to see your books as and when and wherever you are traveling. So we wanted to create a system which takes care of all your books, etc., being maintained online. You can review them wherever you are in your traveling. It takes care of all your compliances, uploads your MIS online so that you can look your monthly MISs, everything online. And it is more of a e-discussion procedure where somebody from InsurTax can interact with you over email after he
Okay.
has reviewed your books of accounts, your bank statement, etc. So it is more of an online B2B sort of platform which we figured out was missing, and to take care that, so you as an entrepreneur don't need to physically go and sit and discuss issues. You can everything on the click of a mouse. You have everything on the cloud solution. So it's more of a cloud solution based website where you
Correct,
can have
correct.
all your accounting and tax things being clubbed and reviewed and available to you whenever you want.
Correct. Got your point there. And the best thing that being one of your customer there for the last half an year or so, the best thing that I love about InsurTax is the your startup program. Which even provides the free ITR filing of two of the directors and two key manager person. I leverage the benefit every year, right?
So
And
that's where the program. See, what we realized, that we have to be very cost sensitive, because at the end of the day, many of these startups are running bootstrap. So what we have made out is that, yes, we have different programs running for startups, which allows them where we render them the services, and we have different programs depending on the nature and business of startups, which we have made sure are not falling very heavily on their bank statements and their profit loss statements.
okay, correct. Okay, got your point there. So, I mean, I think having this discussion was great with you today. I mean, thanks a lot for
But my
educating us
pleasure.
a lot. But therein, I also see a huge issue there, because once with Ashpan Media, also Sanit there was also marketing this event. So there was lots of questions that we were getting, like why as a co-founder I should attend this. I mean, I have outsourced my accounting thing to someone else. Why I need to be aware of this. But this event particularly gave me a very huge idea that it is really important to know all this stuff. and this is what we are going to spread. But I like to collaborate with InsurTax and you on a more often regular basis, like on a monthly basis. As we are keeping a monthly basis books of account, we also should have a monthly basis discussion, with also some of your accountants
No,
to
very happy
bring.
to have that.
Yeah. Yeah. So what I was saying was that even if some of your accountant can come online and have a discussion with CXO level people, because there is a communication gap between the two parties. So if we can do on a more regular basis, we can really change some of the stuff that is happening in the industry. What do you
No,
say
very
about that?
we are very much keen to have that. We can plan it out depending on the time that suits for the CEOs and the entrepreneurs.
Mhm.
And then me or somebody from my team, depending on the specific issues being discussed, we're very pleased to come on board and have those discussions.
Great, 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 Gaurav. Thanks a lot for coming here today. I guess,
No, it's a
Sunny, do you
pleasure.
have anything else to add in here?
To be honest, I mean, Gaurav, it was really wonderful listening to you. And after, if I can sum it up, I believe the conclusion to our discussion today, which we had, would be that in the end, it's all about generating a habit. If
Right.
entrepreneurs get into a habit of, keeping their books right, it's as simple as a very basic instinct of basically getting used to this new habit, which will help you grow better in life, and you will be transparent with all your business functioning is
Correct.
functionality.
It's more of a being healthy. Like you are physically healthy with a good habit, you can also be financially healthy and legally healthy also at the same time by
Correct.
having a good habit of maintaining the records, right?
See, because that's where I just started. That at the end of the day, business has two very basic points. One is the business idea and how you're executing it. And second is reflection of that business is always happening through your books of account. So how well you maintain your books will be direct reflection of your business idea. Because just having a business idea and nothing on books, or just having books with no good business idea doesn't match. So if you have a good business idea and you are maintaining your books good, that's where the real focus should be. So that's where I reiterated initially also that just maintaining books of accounts in a regular manner will go a long way, because at the end of the day your business ideas, your revenues are reflected only through your books.
Okay, okay, yeah. Thanks. So once again, Gaurav, thanks a lot for coming online with us,
No, it's
and I'm
completely
really
my pleasure.
looking forward for more such events.
Sure,
And
Right.
sure,
it's
sure,
been an hour or so since we're live. I hope to see more viewers next time, and
sure,
let's collaborate once again.
sure, sure, sure,
Sure.
Vitartha. Sure. Thanks,
Thanks.
thanks so much. Thanks, Ananda. Bye.
Bye.
Bye.